Well, let's pick up on the story you just heard in news headlines. Brisbane house prices continue to go up and up and up. Data from Coality shows the city's home values increased by 1.8% in October. That takes the yearly or the annual growth rate to 10.8%. If you read today's papers, this morning's headline is screaming at you, 2K a week home run, your house earns more than the average worker. This is the front page story of today's Courier Mail. Leith Van Onselen is an economist at Macro Business. Mr. Van Onselen has been talking with me for some time now about what he sees as the slow-moving car crash of Australian housing. He's previously worked in federal and state treasuries and hedge funds as well. Leith Van Onselen, let's start with those month-on-month rises. What's behind the latest jumps in the Brisbane housing market in October? Can you say?
Yeah. G'day, Steve. Look. There's a couple of factors. Obviously, we've had 3 rate cuts from the Reserve Bank of Australia, which has added momentum to the market, and that's obviously helped to increase home values over recent months. But also, the big driver this month was on the 1st of October. The Albanese government, commenced its 5% deposit scheme for first home buyers, and that appears to have put more stimulus under house prices. So obviously, Brisbane values are up 1.8% over the month. 10.8% higher annually, super strong growth. But Coality's research director, Tim Lawless, he noted that Labor's 5% deposit scheme seems to have increased values at the lower to middle end of the market, which makes sense because that's where first home buyers typically buy.
Now, why is that notable for the lower end of the market? Does that mean working class people on low incomes?
Yeah, that's right. So basically across the middle 50% of the market, values are up 1.4% nationally over the month, and at the bottom 25%, they rose by 1.2%. Now, that was actually above the average rise of 1.1%. So what it means is that basically prices grew faster at the lower end, which is obviously where first home buyers buy. It's where the people try and find those more affordable homes. So that's obviously not a great thing from affordability because it just means that people on lower incomes, etc., are seeing their home prices rising faster, even faster than the high end.
So it used to be that Labor parties or parties on the left represented the working class or the poor, but you're telling me that their policy is actually making it harder for the working class or the poor.
Yeah. So basically, if you look a couple of years ahead, once this policy comes into effect, these sorts of demand-side policies, which just allow people to basically borrow more money, which is effectively what it does, and pay higher prices, they end up getting capitalised into higher home values. We've seen it with first home buyer grants and all these sorts of things. We've seen it for 25 years. So if we fast forward 5 years' time, a future first home buyer will be paying higher prices than they would have otherwise. They will be carrying larger mortgages than they would otherwise. They'll be paying more of their lifetime earnings to service those mortgages. And they'll have less equity in their homes when they begin because they're only putting up 5% deposit. And that leaves them susceptible to, obviously, future house price downturns, going into negative equity, that sort of thing. So this is a disastrous policy from an affordability perspective because if you want homes to be affordable, really prices need to fall relative to incomes.
Well, that's something that the federal government, Claire O'Neill, says they don't want. She was very specific about this on Triple J about 8-10 months back. She said, the federal government does not want house prices to fall.
Yeah, so we saw it from both sides, actually. Peter Dutton said similar. Basically, they want homes to, quote, rise sustainably, which is an oxymoron, right? Because we've already got homes at the most expensive in history relative to incomes, and they want them to basically rise at a slower rate, but it's still rising. So it's still going to become more unaffordable, but just more unaffordable slowly is effectively what they're saying.
Last week in federal parliament, Claire O'Neill, in answer to a question from the opposition, said this.
Now, Speaker, at the centrepiece of our approach to home ownership is us expanding the 5% deposit program to every single first home buyer in the country. And, Speaker, we are immensely proud to be doing it.
In other words, they're not even means testing the program.
No, they're not. I mean, there are some price caps, but they're very, very high and they're above the median in the capital cities. So effectively, pretty much every first home buyer is going to be captured in this. And this is basically just, a state-sponsored, in a way, kind of subprime mortgage scheme because financial regulators, the Reserve Bank, APRA, etc., have for more than a decade warned that high loan-to-value ratio lending, so 95% above, is very risky, and yet this government has institutionalised this as policy.
What happened in the United States when they had a subprime mortgage scheme that we may know as Fannie Mae and Freddie Mac? What happened?
Yeah, so obviously it was a little bit different in the design, but effectively, if you extend mortgage credit to people who are more marginal borrowers and they take out bigger loans than they would otherwise, it's going to increase risk in the financial system. And the Reserve Bank and APRA have been very clear about that for more than a decade, and yet the government has effectively institutionalised that in policy.
And so what they've done is it's very reliant on someone maintaining and keeping a job that has endless wage growth in their job.
Yeah, and because they have such slim equity buffers, so if you only put up 5% deposit, prices don't need to fall very far before you're negative equity. And what also worries me about this is because taxpayers now are taking on 15% of all first home buyer mortgages, they're guaranteeing that then incentivises the government to now bring in more policies that try and pump house prices because they're on the hook, and also having sucked in a whole bunch of first home buyers into the market with these through its policy, it then doesn't want to see the market fall to the detriment of those borrowers. So it's just added a whole bunch of a government intervention that we didn't need to push home prices higher, to push mortgages higher, and to basically ultimately make housing affordability worse.
And here we are. I'll leave it there. Leith Van Onselen, thank you very much for your time.
Yeah, thanks, Steve.
Leith Van Onselen from macrobusiness.com.